Sunday, July 4th, marked the 245th commemoration of the adoption of the Declaration of Independence. Since then, our country has grown from 13 colonies and roughly 2.5 million people to 50 states, 14 territories, and a population that exceeds 330 million. The economy has swelled to almost 21 trillion, and economic output per person has risen by a factor of 30. Advances in public health have cut the child mortality rate from more than 45% to under 1. More than 200 million people have at least finished high school, compared to 18 million in 1940. We've built almost 3 million miles of paved roads and more than 5,000 public airports. In 1800, 95% of the population lived in rural areas. More than 80% now live in urban cities and towns, and minorities represent close to 30% of the population. The 244th year was a tough one, but so far, the American experiment has held strong. From all of us at Capital Consulting Group, I hope you had a wonderful 4th of July weekend. Today is the first day of the third quarter, which means that this week's update covers the last week of the second quarter. So I'm going to roll the intro, and then we will dive into this week's update. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Strong employment reports and rising consumer confidence sent the stock market broadly higher this past week. The Dow Jones Industrials Average rose 1.02%, while the Standard & Poor's 500 picked up 1.67%. The NASDAQ Composite Index gained almost 2%, coming in at 1.94%. The MSCI EAFE index, which tracks developed overseas stock markets, actually came down 1.42%. Rising conviction in the economic recovery and waning inflation worries drove stock prices higher, with the S&P 500 and NASDAQ Composite racing to record closes to begin the week. Amid the week-long march higher, market leadership changed hands throughout the 5 trading days. The leadership baton alternated between the technology and high growth companies, which responded to lower bond yields, and cyclical stocks, which rallied on higher oil prices and successful bank stress tests. Economic news buoyed investor sentiment as consumer confidence rose in an improving labor market. Weekly initial jobless claims came in at a pandemic-era low, 364,000, while employers added 850,000 new jobs during the month of June. This sent the S&P 500 and NASDAQ Composite to new record highs to close out the week. Market sentiment was lifted by a rise in the Conference Board's Consumer Confidence Index, which reached its highest level since the onset of the pandemic in March of 2020. This was the 4th straight month of increases in consumer confidence levels. The consumer outlook for income, business, and labor market conditions over the short term improved markedly. Interestingly, consumer confidence and buying intentions appear largely unaffected by the possibility of rising inflation. In fact, the survey showed a rise in the number of consumers expecting to purchase homes, automobiles, or home appliances. Vacation intentions also rose. Inflation is defined as the general upward price movement of goods and services in an economy. The key word is general. Inflation tends to be uneven and affects the price of some items more than others. If you've been in the market for a used car, you've learned a critical economic lesson about the uneven side of inflation. The overall rate of inflation has been 5% for the past 12 months. Meanwhile, the average price of a used car is up 30% from a year ago. Various factors drive used car prices. but most of the trouble links to the global microchip shortage. Demand for used cars may well slow later this year as automakers return to normal production levels. As the market shifts, some people who bought used cars may learn another key economics lesson. They might owe more for their car than what it's worth as prices return to historic levels. The most important takeaway is that inflation touches our lives in different ways. Gasoline prices are up sharply from a year ago, but you might not feel the increase if you work from home or if you're retired. However, at the grocery store, all shoppers are paying higher prices for everything from beef to pork to milk. If all the recent inflation talk has you uneasy, please contact us. We'd welcome the chance to hear about your experience with higher prices. Remember, later on today, I will be emailing out our full weekly economic update. If you're not getting this and you would like it, you can subscribe at our website. In this update is also our financial tip of the week, companies reporting earnings, financial data that we're watching, plus a riddle for you, as well as a quote for you too.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.